Hello, it's me again, Doug Osnes from the O team at Keller Williams Realty, and I want to welcome you to your first time home buyer seminar. This is for first time home buyers, and it's really great information for ongoing home buyers as well. Now, we're putting this together because we do some lunch and learns at the office, but I know a number of you are off-site or some even remotely located, and so we wanted to make this information available to you as well. So what we're going to talk about here today is available to you wherever you are in the country. We just need to know that you're interested in buying a home. We've got some great realtor connections all across the country. We can get this same program available for you wherever you may be. Just need to give me a call. Again, my name is Doug. My number is 720-258-8200. 720-258-8200. And we can provide this for you wherever you may be in the country. Okay? So let's get started and let's look at some information about buying your first home. After Hurricane Katrina destroyed New Orleans, there was a survey that was done of the survivors there. And they were asked the following question. Besides love, what do you identify as the most important four-letter word in the English language? Now, one of the employees has said she thought that word would be help. And that probably was one that maybe came to people's mind. But actually, in the survey, the people said home, H-O-M-E. So obviously, that was a very important element for people to be answering this question. Home is an important place, and it's where love takes place. It's where you raise your family. It's where you provide safety for them. It's an important place to have. And those people who had lost their homes knew that very well. So today, we want to talk to you about being able to get you into a home. So we're going to talk about some common fears that people often have and some facts that offset that. And then we'll also discuss 8 simple steps to home ownership. That's kind of our outline for today. Fear number 1. I can't afford to buy a home right now. Well, actually, you can't afford not to buy a home right now. Now is the best buying market we've seen in the U.S. in 50 years. Interest rates are at record lows. Home inventory is up. Home affordability is up because prices have dropped. If there's any way you can get into a home, now is the time to do it, especially before interest rates start to rise. So you can't afford not to buy a home. Some people have the fear that I don't have the money for the down payment. And actually, there are numerous options for a down payment. A variety of options, we'll talk about those a little bit later as well. So you don't need to let these fears stop you from buying your first home. 8 steps. This is our outline to home ownership. And we'll come back and discuss these in more detail. But deciding to buy is the first question you've got to answer, of course. Then hiring your agent to be able to work with them, secure your financing, find your home, make an offer, and perform your due diligence. Closing on the sale is what the fun part is when you get to move into that home. And then protecting your investment is an important key element as well. So let's break this down. Deciding to buy. The U.S. Federal Reserve Board did a study over a 10-year period, and they looked at the average net worth of renters versus homeowners. And what they found was, after that 10-year period, the average net worth of a renter was just $4,000. But as you can see on this slide, the average net worth of a homeowner was $184,400. Now, a lot of that has to do with home appreciation. Those things have changed a little bit, but that's an incredible difference. It's much more important to be an owner versus a renter. So that's the important thing, first thing you need to be focused on deciding to buy. Home's the largest financial asset that most people will have due to equity and appreciation over time. So let's look at a couple of numbers here. The average annual appreciation rate since 1977 in the United States has been 5 to 6% a year. Now, last couple of years, we've seen a switch in the market, but that's a long period of time. That's a long track record, 1977. Now, local appreciation rates do vary, so your local community, it's important to have a local realtor who's a local economist and can answer what the appreciation rate or that information has been for you in your area. But let's say just at a 3% annual appreciation rate, home purchase for $150,000 would grow to be worth $364,000 in 30 years. Even at a 1.5% annual appreciation rate, this same home would still grow to $234,462 in 30 years. Okay, so keep that in mind. So why pay rent when you can own? If you took a 30-year fixed rate mortgage on a $150,000 house and you made monthly mortgage payments of $900, you'd pay $324,000 in mortgage and interest payments over the life of that loan. And after 30 years, you'd own a home with an appreciated value potential of $364,000. Now that's at a 3% appreciation. Remember, appreciation rates do vary greatly based on local conditions. Compare that to paying $800 per month in rent for 30 years. Even if your landlord didn't raise your rent, you would pay $288,000 and own nothing. And your rent's probably going to go up during a 30-year period as well. So it's much better to be an owner than a renter and to build an asset for yourself over time. Next step, you need to hire your agent. Real estate agents perform 7 main roles. They're listed here on the board. Educating you about the market, analyzing your wants and needs. What kind of a home do you want? What size? What are your needs for your family? Guiding you to homes then that fit your criteria. Coordinating the work of other needed professionals. You've got to have title people, inspectors, appraisers, surveyors. There's just a plethora of people that you need to work with, and you want to have good professionals to work with. That's important to a smooth transaction. Realtor also negotiates on your behalf to get you the best deal. They review paperwork and deadlines. And probably the biggest benefit that you get is they solve any problems that may arise. This is a big transaction. It can be tricky. There are problems that come up. You want a professional to help you in solving and resolving those problems. So, your next step after you've hired your realtor would be to secure your financing. There's a difference between a pre-qualification and a pre-approval. Okay? Pre-qualification is a rough estimate of how much you may be able to borrow. A pre-approval involves a formal loan application process, provides you with a formal commitment from a lender stating exactly how much you can borrow and at what rate. So you'll know what your payment is, but the seller will know that you qualify for the loan. It's like becoming a cash buyer. They don't have to wonder about your offer and hope it's going to be a good one. The loan work is all done. You're pre-approved. That's what you want to do. That's what we do with all of our clients, is we get them pre-approved because we want you to know what you're paying and we want to make sure the seller knows that you're a good buyer for them. Then there's 6 steps to financing a home. You've got to choose a loan officer or a mortgage specialist. Again, you want a good one who does what they say they're going to do and can get your loan done and taken care of. We've got some great ones that we work with. You make a loan application, you get that pre-approval done, as we just talked about. Then you determine what you want to pay and you select a loan option. You may qualify for more house payment than you want to have. That's important to know, and your realtor needs to know that as well, so they can get you into where you're comfortable for that home payment. Then you'll submit to the lender an accepted purchase offer. You've gone out looking at houses because you have your loan pre-approved. You find the house you want. You put a contract in. We submit that to the other realtor as well as to your loan officer so they know what you're looking at paying on this house. Then you get an appraisal, title commitment. There's a couple other pieces that have to happen along the way as well. But you want that done because at the end, when you get ready to go to closing, you're going to have your funding ready for that loan. So securing financing is a very important step. There's a couple mortgage options you want to be aware of. There's 3 basic factors. Your down payment. The greater your down payment, the lower your monthly payment. The interest rate you'll be paying. That's important to know. That's a lot of your purchasing power there. And then the term of the loan. Is it a 30-year, 20-year, or 15-year? All those things affect your payment amount, and you want to make sure you're comfortable with those numbers. In regard to down payments, the standard down payment loan these days is on an FHA loan. It's 3.5% of the purchase price that you're putting down on the payment. Now, if that's an issue and you don't have that much money to work with, there are some programs in different cities and different states across the country where you can get down payment assistance in order to help you secure the funding you need to get you into a home here in Colorado for $1,000 even. So those are some other options you'll need to know. You need to have a good lender to work with to make sure you've got all the right financing options in place for you.